Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's January the 13th, 2012, and the markets will be closed. The U.S. markets will be closed on Monday for Martin Luther King Jr. Day, so keep that in mind, and we have a long weekend ahead of us. I'm going to go do a recap of all the 16 major markets that I monitor here for you guys, so you know everything I know going into the week ahead, and get you guys some time to study that stuff, over the weekend. And then I want to also alert you to a couple of facts. Number one, I start back to school next week. Actually, my next semester begins next week, so I'm going to be doing a little bit different on the market analysis videos. On the Friday video, I will cover all 16 every single week, but on the Monday through Thursday, I'm just going to highlight a couple of markets here and there every single night that I see that I think there's information you need to be alerted to. So it'll be 1, 2, 3, maybe 4 charts, depends on what's going on, but it won't be the same charts every single night because it'll be based on whatever comes to my attention that I think is important to alert you to. But on Friday, we'll continue to do the same thing we always do, which is give you a review of all 16 major markets. Okay, so let's start off today looking at Australia's markets, and this one we told you was a buy opportunity. As you're pulling back in here, we thought this was still bullish, and you're still going to make a move to the upside. We thought that because you had a series of higher lows here and here, you're taking out this high with this high, so we said it was a bullish condition. We liked it. And that continues to be the case. You can advance your stop that was way down here. You can advance it up here or here, whichever one you feel more comfortable with. But just lock in some gains because we are getting long in the tooth with this market. And sooner or later we will have a reversal, and that will pull down all markets. So keep that in mind. A quick look here at the Dow Jones Industrial Average. We have a lot of things to look at here. We've told you that we're looking at this series of low points here, trending up like this, and that this was looking quite bullish. However, when you did the same trend line analysis on the tops from here and here, you would find yourself looking at a rising wedge pattern, which is actually not a bullish pattern. It's a reversal pattern from an uptrend to a downtrend. We also told you that we see a series of high points here that are trending down, while the corresponding high points on the same chart are trending up, and that's a bearish divergence, basically another sell signal, something else telling you that we're topping. But it doesn't happen immediately. We told you you can ride this wave to the upside. She can continue to trend to the upside within this channel, but once she broke down and she broke through that channel, it was a big move to the downside is typically what you see there, and you can actually get some kind of a projection target on that by taking the distance between these 2 points and measuring that distance and then adding that to the breakout. Had we broken out today, which we didn't, but had we closed down below this trend line here, you could take this distance and measure it out and say, I expect us to fall this low. Basically, that's one of the ways to do it. It's just a target, but it gives you some idea. What we're looking at right now is a pullback that happened today. We kind of warned about that last night. We told you we had a lot of consecutive days to the upside in the NASDAQ. We expected a pullback. Well, we also got it across the global markets. Let's in that chart a bit. What we see going on right now is a continuation within that trend. Though we did get a pullback today, it wasn't actually as substantial as some might think. What you have to do whenever you're looking at these moves up here is really get in, fine-tune, and analyze the low points, then the breakout, then the low points, then the breakout, and then the low points. And what you'll notice here is that you still haven't taken out a low point. You've still got a rising series of higher highs and higher lows. So even this pullback we saw today did not take out this low point. Now it may on Tuesday when U.S. markets open back up, but at this point it actually hasn't. So it's not actually sell, 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 that kind of a deal right now. We haven't actually broken down in price. And if price doesn't break down, that's telling you something. There's still a bid there. There's still somebody willing to buy right here, and that means you can still see pressure move to the upside. So don't be overly bearish just because you're starting to have a down day when we got all these sell signals in play as well. However, would I be a big strong buyer here in the Dow Jones Industrial Average? No sir, I would not. I could find better charts to do that in because, like I said, I'm not a fan of the way this overall chart pattern looks to me. It's not a bullish chart pattern, and I can, like I said, find better charts. Okay, European markets got some downgrades today from the S&P. Not anybody listens to them anymore, but anyway, they did. That smacked their markets around a bit. and that's what we're seeing, a little bit of a sell pressure coming out of there, or some excuse for a sell pressure right there. Do I think this is the beginning of the end? It's possible. You do have a series of lower lows and lower highs from a candlestick perspective, basically analyzing this candlestick's high and this one, and this candlestick low and this one, but that's all you've got. When you actually analyze the trend itself and the low points, and you will notice that you did not at any point in time take out a low point. You're still in an overall uptrend. So, I wouldn't read too much into a down day personally. It's another situation where you've broken out of the previous high point here. You broke out of that. You're bouncing around in here, just finding support at this level. To start shorting here doesn't make a lot of sense to me, because you're going to have some support where previous resistance was. Now you're going to find support there. So it's not a lot of downside potential, in my opinion. Also, you're not up there above the overbought 70 line on the ultimate oscillator, which is where I like to find my short opportunities and my sell signals, so I'm not all that bearish right here. We do have an increase of volatility. Let me show you that. You can notice by looking at the candlestick, the actual size of this candlestick versus the previous, you can see we have increased volatility here. So let me tell you what I would do if I was wanting to short this market, and I'm not, but if you do, I would use this previous candlestick right here, this shooting star inverted hammer kind of thing. I would use this as a opportunity to set my guidelines for a short. Let me see if I can find an example of one. Here we have one, okay? We have a shooting star formation right there. What you can do is take the high point, and that's where you set your stop loss limit at. Take your low point, and then anything from that within that channel right there would be where you would be wanting to short at. As long as she did not make a higher high, your short will work, and that will move you lower. However, if you got price activity that breaks out, you want to get stopped out, because this is not really the bottom, the top. So obviously you would not want to be caught short there. So in this case right here, you could do the exact same thing. Use this high point here as your stop, and just advance yourself a little stop right there, and then analyze the low point here, and anything within that channel you can short. Keep a tight stop on it. Alright, quick look here at the DAX, or the DAX German markets. You'll notice, much like the French markets we just looked at, a little bit different than we have a bearish engulfing the previous candlestick formation. That's a sell sign. We also have this shooting star formation. That's a sell sign. You also have this bearish engulfing formation. I'm sorry, not bearish engulfing. Bearish divergence formation there. That's also a sell sign. So you've got lots more here to work with on the sell side, and I can understand anyone shorting here. I would do the exact same thing here that I just shown you on the French markets. If you're going to short, what you want to do in this situation, because you don't know this is really the top, what you want to do is use this high point here as your stop, and then use this low point here as the max you're willing to start shorting at. So at this point, anywhere in this range, you could be a seller and look for this move to go lower. But if you get a breakout to the upside, obviously that would not be the top, and you would not want to necessarily be shorting there. So you want to end that short as quick as possible. However, I'm going to point this out with all the charts we're looking at today. A down day does not a downtrend make, and that's basically what we have here. We have an uptrend going on, and this is formed very nicely. Let's see, how do we do this? We come here, we pull back here, here, pull back here, and we pull back a little bit today. Have we made a series of lower lows? No. So this is still, in fact, in an uptrend. Until that changed, I personally wouldn't start shorting, but that's just me. Quick look here at the gold markets. This is the same old story we've been seeing all over the markets here. Shooting star formation here, bearish engulfing candlestick formation here. However, we're not in the overbought condition there, and that can add more reason to ask yourself, are we really peaking? Is this really the high? You also notice you took out the previous high point here. Let's just use the close. And you'll notice that we pulled back today only to this level, previous resistance, now acts as support, and bounced right off of it. This is another reason why I wouldn't be shorting here. It's just not got a lot of downside potential. Get nice and overextended well above this little support line here, and then you've got something to work with. Right now, it's going to be a hard short. It's a hard job to short that. But if you do short it, you want to use the same method I've already showed you for the last two charts. Look at this shooting star formation right here. Take the high as your stop, the low. Draw yourself a little line out there. Anything within this channel is where you want to be doing your shorting at. However, I would like to point out, like I have done with all other charts, in this particular scenario here, you have this move to the upside, a pullback making a lower series of lows, and then you have a breakout making higher highs. What I would rather do, rather than try to short here, I'd like to wait for a pullback and give me a series of higher lows, and then I've got higher lows and higher highs. That's a buy opportunity, and I'll take it higher. Quick little look here at the Hang Seng, Hong Kong Hang Seng Index. You will notice the same scenario. Note this little candlestick formation right there. Same thing as your shooting star formation or inverted hammer. It's more of a doji, but in this case it don't really matter. You'll also notice you could trade it the exact same way, but I'm not necessarily sure I would. You are at resistance, and you are overbought. So if you were looking for one that you really thought you believed in more than the others, this one would be a good one. But how far are you going to go to the downside? I don't see a lot of volatility back here. Yes, we have nice volatility. Then we have a nice move here, a little move here, and then a little move here. I don't see the volatility that I want to be getting on the short side. Back here, yes, I see that. Over here, okay. Here, it's just, there's not a lot of volatility in the chart. I don't want to try to trade that personally. India Bombay Stock Exchange, or the BSE, we have had a breakout now from this downtrend that we had going on back here. Kept finding resistance, and then breakout. We like that. Higher series of highs, higher series of lows. We are now in an uptrend. But I personally am not getting involved here. What I want to see is a convincing move to the upside, and then a nice opportunity to be a buyer here. Right here, I just see a lot of low volatility. She may break to the upside. That's what she's showing right now. But she may also break to the downside. So I'm not really going to get involved here. I can find better charts. The EWJ, or the Japan iShares, same basic scenario. No volatility. We had this really big move to the downside here. Nice move up here, finding resistance at the same level here and here. Pulls back down. Bounces up here to the same level, finds resistance, bounces off, and now we're just consolidating, moving sideways. Are we going to break out to the upside? Are we going to break down? I don't really know. I would actually bet on a break to the upside because the overall markets are moving higher. As long as that continues to be the case, you're going to find some rising tide lifts all boats. But right now, I could find better charts to trade on the long side. I like volatility, and this just doesn't have it right now. Let's have a look here at the FTSE, or the London Financial Times Index. This one actually has a good argument for the bearish side. Note we got overbought above the 70 line, the ultimate oscillator. When you do that, you want to look for your short opportunities. We got a reversal on the candlestick formations, but we hadn't actually broken down this uptrend. We have this uptrend going on, and she didn't break down. She made a low here, made a move higher again, but failed to break out to higher highs. And she pulled back down, and today she pierced lower than the previous low. This is the first chart I've seen that actually has a good argument from a bearish perspective. You are seeing lower highs, you are seeing lower lows, so yes, this would make sense from a short perspective at this point because we have seen this breakdown, but the other charts have not shown it yet. Okay, so now you see something here that you could possibly trade. Let's take a quick look here at the NASDAQ. You can see that in this particular chart, which did see, like we talked about yesterday, you were overextended above the ultimate oscillator 70 line. That tells you can start to find a top in that area typically. So we're looking at that, and we see that we have 1, 2, 3, 4, 5, 6 consecutive days in a row to the upside. We know we're pushing our luck. There's nowhere on this chart that you have 6 consecutive days to the upside. In fact, you have 4 back here. 1, 2, 3, 4. Downside scenario, basically the same thing. 1, 2, 3, 4 consecutive days to the downside before you get an attempted move yet away. So to see 6 in a row, we told you was not something you can really expect to continue right there. You're going to get a pullback, and that's what we got today. But is this the end of that pullback? We don't really know. What we do know is the overall trend is still up. Let's have a look at that and clean that up a little bit. What you can see here is the same scenario I've been showing you all day long. You've got these high points, low points, pulling along, making a little dance, and we're not actually seeing a series of lower lows and lower highs. So at the moment, I wouldn't put too much weight on that down day that we saw today. I wouldn't actually be all that bearish out here. We've already told you that we'd be buyers back here when that was the opportunity, and that would be our target, and we would be out of it. We wouldn't even be sitting here trading this to the long side at this point. But you may be out there trading to the long side, and you may be attempting to short it. This is an uptrend, so at the moment I would not actually attempt to short it. I want to see lower highs and lower lows before I will start shorting. Quick look here at the oil chart, oil index. You will notice that you have this little uptrend going on over here. We talked about this and lots of opportunity there. Then what you have here is a series of lower highs forming a bearish divergence here, while price was actually moving higher. It gives you the bearish divergence formation there. Then you have a move here, a higher high, and a lower low. However, let's look at a couple of points here. This low point here and this one here, they're trending up, and you'll have a hammer formation on the middle Bollinger Band line in conjunction with the 200-day moving average and the 50-day moving average. All of that is in line right here. So you've got this support, this trend line support, the middle Bollinger Band support, the 200-day moving average support, the 50-day moving average support, the hammer candlestick formation, and you'll notice that the low point here is actually lower. They're trending down while price is trending up. That's a positive reversal, calling for a move back to the upside. So I wouldn't be bearish at the moment right here and now. In fact, I'd wait for another jump to the upside. We may then get a series of lower highs and lower lows. Right now we have lower lows and higher highs. So I want everything in line before I will actually jump on board on the short side. Looking now at the US dollar or the UUP, you can see that what we have going on is a lot of mixed signals. Now we are in an uptrend. That is not something that can be argued. So you're looking for something to go long, and then it would still be something you could look at as long as you got a pullback. But right now we were looking for extreme scenarios. And back here, if we look at the ultimate oscillator falling below the 30 line, we could find great buying opportunities. Hitting the 70 line, we could find sell opportunities like we did back here. But right now we're not seeing any of that. We're actually drifting higher. Do it back here. We're drifting higher along this trend channel here, but you're actually not extreme in any condition up or down, so there's really not a great buying opportunity here nor a great selling opportunity. I just leave it alone. Quick little look here at the Russell 2000 Small Cap Index. This is something you should learn from. Over here you have a shooting star formation. Someone could have taken the same strategy of shorting at that point, defining this low point as being the max they're willing to short at, so within this channel, and it fails right here. It would not have worked out, and she breaks out to the upside anyway. That may happen with all those charts we've already pointed out to you on, because you can still see move to the upside here. We still have upside potential, room to move to the upside. Back here it worked a lot better because you were dealing with resistance lines, so forth and so on. But here you've got to move to the upside, a breakout to the upside, and a pull back down ever so slightly. But what are we going to find when we pull back down too far? We're going to find support right there. Previous resistance is going to act as support, and I don't see a big sell move here. We are overbought, so you can pull back and you can keep pushing higher. Just because you get overbought doesn't necessarily mean that it's the top and you have to roll over, and right then it doesn't work like that. But in any event, I'm not seeing a lot of actual great selling opportunities at the moment in the U.S. markets. And as I've already stated, I do see more room to the upside here, basically challenging the highs that we've already dealt with about 7-8 months ago. So we'll talk about that later. But right now, that's where I see the markets are still pushing to the upside. We may get more news out of Europe next week that could maybe, end this move to the upside. But right now, just keep watching your low points. If you're not making lower lows and lower highs, you're not in a downtrend. If you're not in a downtrend, then you don't want to short it. You want to work with the trend. And right now, this trend is up. Quick look here at the S&P 500 Large Cap Index. We told you a while back that we were seeing a bearish divergence actually starting to form on this chart. However, if you'll notice, in this particular case here, she's broken through that. She's no longer showing a bearish divergence. You have the trends moving up here, and you actually have broken out higher point here than you had back here. So this is now confirming what you're seeing here. It's no longer in a bearish divergence scenario. That's another good reason to let your divergences continue to form, and before you get all bearish or all bullish on them, because sometimes they're just being formed right at that moment, but they will not actually continue to be that way. They're just temporary lapse. So keep that in mind whenever you're looking at different divergences. And the key thing to note is whenever you, like in this case, we thought we saw a bearish divergence, we told you don't sell it until you start seeing lower lows and lower highs. And you're not seeing that now, so you never would have got in on the short side. And that's a key element to your trading. Timing it right means you have to wait for price activity to begin to respond to what it is you think you're seeing in the markets. And right now, we're not seeing anything that looks like a series of lower highs and lower lows. Right now, we're still in an uptrend, which means higher highs, higher lows, and that means continue to be the buyer, not the seller. Silver is a weaker chart than gold. We talked about that in the past. This one, you've got a bearish engulfing signal, a shooting star formation here. all kinds of reason to be bearish at the moment right there on those two candlestick formations. However, you did break out of previous resistance. With the previous resistance we took out, and now we're going to pull back down and find this resistance line is going to be acting as support, so I wouldn't be overly bearish on it. In fact, if you got a little pullback down here and start reverses back to the upside, what I actually see right there will be an inverted head and shoulders pattern, which is what you expect to see in a bottom. But we'll get to that later if it continues to form. Right now, just keep an eye on it, but I wouldn't be shorting it. Canada's TSX market, we talked about this one a few days ago. We had this shooting star candlestick formation there. I told you the same thing. You were in the overbought condition, so you could trade this using that method I've already talked about in this video, where you use this high point as your stop loss limit. This low point is anything you would be willing to short at. You could short a couple of days. However, we talked about when I pointed this out that you got the same problem as you have with other charts. You moved up here, found resistance, pulled back down, started to form a reversal signal here, and you broke out to new highs, which meant previous resistance is going to now act as support. Basically, that means your short right here is not got a lot of move to the downside before it finds support. You don't have a great short opportunity here, and that's exactly what happened. You sold off for let's see, about a day right now, and you're just going to pull right back up to that support line. That can continue to be the case. You can move sideways here. You could dip it a little below it and bounce back up to it. There's not a great short opportunity here right now, in my opinion. Let it get overextended away from this support line, this minor support line, and then we can consider a short if we see the opportunity set up. But right now, I just don't see it. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.